Welcome, my name is Bradley Maclean, co-founder of Regulation Asia. The COVID-19 pandemic and crisis of 2020 has spurred electronic payments in ways never seen before. In the context of the crisis and beyond, we're keen to explore the evolution of payments, the payment system, and today I'm joined by Douglas Arner, the Kerry Holdings Professor in Law at the University of Hong Kong and Director of the Asian Institute of International Financial Law. Welcome, Douglas.
Thanks, Brad, and great to be here.
Now, Douglas, you've co-written a paper for the European Banking Institute titled After Libra, Digital Yuan and COVID-19, Central Bank, Digital Currencies and the New World of Money and Payment Systems. Now, from my understanding, the purpose of the research is to explore the role technology plays in improving the effectiveness of money and payment systems around the world. I mean, as a starting point, why this topic now?
You know, this paper is something that the original title was After Bitcoin. And I think that gives you an idea of what has happened. And I think what we've seen really since the advent of Bitcoin is a technological revolution in money and payments. Technology changing money and payments at a faster rate than we've ever seen before. And I think what triggered this is we were initially asking in the wake of Bitcoin, what would come next? And just as we were sort of getting there, about a year ago, Facebook comes out with the Libra proposal. And that sort of right there, Libra comes in, and the Libra 1.0 proposal was an absolute game changer. Regulators, policymakers, central bankers all over the world, that proposal for Libra 1.0 changed everything. And basically, prior to June 2019, the Libra proposal, central banks were interested in blockchain, they were interested in Bitcoin, but it wasn't transforming traditional money. With Libra, everything moved forward into high gear. Central banks around the world became very concerned about a potential real competitor emerging. And so all of those CBDC projects, central bank digital currency projects, that central banks around the world had been working on prior to the Libra announcement got massively accelerated. And so we did a big paper about a year ago looking at Libra, spent a lot of time looking at that. And so this paper then became After Bitcoin and Libra. Now, just as we were about to do that, we were saying that what's next on the road after Bitcoin and Libra, it's going to be a catalyst for central bank digital currency. And of course, what do we get last October? The announcement of the Chinese digital currency electronic payment system, the digital Yuan. And basically the idea that this was finally going to be the milestone, the game changer for a major central bank issuing a digital currency. And I think that was. But then, of course, along comes COVID-19. And COVID-19 has pushed, once again, everything up a step. Even if we think of the announcement of the People's Bank of China that they're going to launch the central bank digital currency, still nothing really happened for a period of months until after COVID-19. We only see the pilots rolled out for live trials over the past month or two. And that was largely accelerated by COVID-19. So essentially what has happened is that over the past year, you've had Libra, the digital Yuan, and now COVID-19. And these three things together on the top of the technology that started with Bitcoin is now really pushing forward a monetary revolution in a way that we've never seen before.
Excellent. Now, in the context of crisis and beyond, can you just share with us some of the high-level themes that emerged from your research?
Yeah, so, I think in other work, we've looked a lot at the relationship between the COVID-19 crisis and digital finance. And a number of things we've really seen accelerated. Really, the first has been electronic payments, that in the context of lockdowns, what is most useful are basically systems of electronic payments which enable e-commerce, but they also enable direct transfer payments across a population. So we've seen lots of countries trying to move forward either where they already are in terms of joining everything together or pushing forward with new systems in order to bring in essentially an interoperable payment system across an entire economy. So that's one side. The other side where we've really seen pushing happening is in the context of digital ID systems, basically mechanisms which you can use in the context, particularly of health tracking, but those digital ID systems also match with the electronic payment systems. And that combination is, in our view, fundamental to really transforming the way that finance is going to operate going forward. Now, all of these discussions, and of course you get this sort of Libra plus the digital Yuan plus COVID-19, and what you have are lots of central banks around the world saying, all right, is this the time where we really should be thinking about a central bank digital currency? Is this the time? And that is why we came out with this now, because lots of discussions are taking place in central banks around the world about what they can and should do, not only in the context of dealing with this crisis, but also setting a framework, setting the infrastructure to take us out of this crisis and beyond.
In the paper, you discuss specific catalysts for what you call a fundamental reorientation of domestic and international monetary and payment systems. What are these catalysts, and what do you expect, or what have you seen, or what do you expect central banks and regulators to do in response to these catalysts?
You know, I think we can sort of break that down into one, the blockchain side, which is everyone's investigating the technology in central banks, but it'd been fairly so. Second, you can think about Libra and global stablecoins, and that is a sort of second element. The third is around major central bank digital currencies, and the fourth is around other central banks. So in other words, we kind of break the world up into different elements, and from some directions. If we look at global stablecoins, you know, there's been a real backing off from Libra 1.0 to Libra 2.0. And from the standpoint of major country central banks, Libra 2.0 is a lot less of a worry than Libra 1.0. In many ways, Libra 2.0 is now partnering with major central banks. Now, from the standpoint of developing country central banks and developing countries' currencies, though, Libra 2.0 still is a potentially big challenger. So if we think about non-major country, non-major economy central banks, global stablecoins, including Libra 2.0, remain a concern. Second, there is definitely across the G20 and globally the idea that was pushed at the heart of Libra, this idea of reducing the costs associated with remittances. This is something that's still accurate. This is something that still needs to be done, and that arguably there's a real role for global stablecoins in the context of cross-border payment systems. The final bit in the context of global stablecoins is really this central idea of how can we bring together transactions and payment. So in other words, if you think about something like a stock transaction, you have the transaction where you have the buying and selling, the settlement of the actual security, but then there's a separate parallel payment transaction. Really, in many ways, one of our biggest risks in financial regulation that we focus on is the separation of the transaction from the payment. Now, one attraction of blockchain is potentially the ability to bring transactions and payments together. But in reality, none of the sort of private stable coins that we've seen develop is really sufficiently robust to make that happen. What you really need is something where you have a partnership with major country central banks. Now, it could either be a direct wholesale central bank digital currency where the central bank is providing it, or it could be something more like how an RTGS system, a real-time gross settlement system works, where essentially you have a liquidity backup from the central bank that then links directly to the stablecoin, which is then operative in the blockchain environment. So I think when I think of what is really driving discussions right now, around stablecoins at least, one, you still have the developing countryside. Two, you've got the continuing issues around global cross-border payments. And three, you have this need to bring together payments and real transactions. And the fact that either a central bank linked stablecoin even Libra 2.0 is a possibility, but also something like utility settlement coin or a real central bank digital currency, particularly of the wholesale variety, offers really exciting scope to make that happen and really transform financial infrastructure going forward.
Now, obviously, you've identified three different elements. One is the technology, two is the market infrastructure, and then three is kind of the regulatory environment. From a cross-border perspective, this requires obviously a lot more coordination, standardization, and harmonization. What would be the steps that need to happen for this to really be rolled out?
Yeah, I think the Libra 1.0 experience really taught one lesson to the private sector. And that is that you're probably better off if you're looking at a major global project, working with the regulators as opposed to just coming out with it as a fait accompli and saying, it's done, off we go, deal with it. That didn't work out so well. And of course, what we've seen is all of the recent major appointments for Libra 2.0 are all ex-compliance people from major financial institutions. So I think what we're seeing from the standpoint of what needs to happen is a partnership between the private sector and central banks where there's an agreement on what needs to be done, looking at how the technology could help us do that, and then work to a system that meets the regulatory objectives on one side while still trying to solve those problems on the other. It's quite different from the original sort of Bitcoin idea, where you basically present a challenger that operates completely outside of the traditional system, and that was part of the attraction. Libra 1.0 kind of tried to do a little bit of it that's itself, but I think where we're looking at going forward is really sort of working together between the private sector and the public sector to try to come up with a solution.
Now, you've identified the digital yuan as a systematic catalyst. What does this mean, and what are the broad implications of such a catalyst? What are your expectations for the digital RMB?
Yeah, I think first we're still at the live testing stage, so it's pretty close, and we've got a pretty good idea of many aspects of the functionality. But of course, how it's actually going to operate in the context of rewiring the financial system, the economy in the context of China is really still a bit up in the air, and particularly for people outside of China, I think that is something that is still very much an unknown. But I think we look at this because we basically said that the idea, one of the big impacts of Libra 1.0 was to drive major currency central banks out of a fear of competition to develop their own alternatives. In other words, if you have a risk of a private sector company coming up with something that may disrupt your existing monetary system and sovereignty, you have a real incentive to come up with your own alternative that will do that itself. And I think in the context of China, that is certainly one of the objectives of the digital yuan. It also has the possibility of potentially linking all of the disparate pieces of the payment system together, achieving for the first time interoperability, giving much better information from the standpoint of the central bank, both from the standpoint of monetary policy, as well as from the standpoint of market integrity. So I think one side of the influence is the impact that it's going to have in the context of China. It really brings all of the pieces together as a unifying system. That is something that other countries, other economies will look at very carefully to see how they can do similar things. That's one. But the second aspect is whether over time it is expanded so that it allows participation from outside of China. So initially, the design of the system is basically going to be domestic only. It's basically going to operate only in the context of China's existing sort of blockchain infrastructure and internet infrastructure, though with the possibility of non-residents having access to wallets, but those wallets not really being terribly usable outside of the context of China. Now, over time, one can imagine ways in which that sort of currency bubble could be expanded to include other participants. In other words, if we think of existing liquidity features, existing swap lines with central banks around the world, which have been built in the context of RMB internationalization, one can imagine direct linkages between those outposts of the yuan all over the world and the possibility of direct engagement with non-residents. Now, it doesn't mean by any means that China is going to allow the tokens to freely circulate outside of its borders. But it does mean potentially that people could open accounts with those entities and financial institutions in Myanmar, in Laos, in Malaysia, in Argentina, in Brazil, wherever they may be, that would then allow them to interact directly from a monetary standpoint in the context of that RMB area. So as an alternative, that is the basis of a potential digital monetary system operating outside of China's borders, but also potentially outside of the dollar area. So the idea here is that the digital yuan is a systemic game changer because, one, what it's likely to be able to do in the context of China's own economic and monetary system, but two, its implications potentially for those interacting with that system from outside.
Now, just jumping back a step, we were talking about stablecoins a few minutes ago. In the research, it actually highlights that they require particular attention. From your perspective, how so? And what do you anticipate will be the plight of stablecoins in the short to longer term?
You know, I think that going forward, in some ways, the bigger story may well be the central bank digital currencies than the stablecoins. I think the way in which Libra 1.0 was really reined in by major countries' central banks and regulators shows the limitation of those approaches, particularly in the major economy context, where the real potential impact on the stablecoins comes in is, one, from the standpoint of developing countries where they will be a credible alternative, but two, from the standpoint of how we may be able to see essentially synthetic stablecoins. What I mean by that is a system where you have a linkage, a direct linkage to the liquidity network, the payment system of the central bank in fiat currency to a digital system, a blockchain-based currency in a blockchain environment by a private sector entity or more likely consortium. And I think from the standpoint of the way that financial infrastructure evolves going forward, that role is going to be very important. And I also think from the standpoint of where we are likely to see regulatory approaches, the focus is going to be on that. How can you partner? But also, how can these sorts of arrangements, not necessarily in partnership with central banks, be used from the context of facilitating cross-border payments? After all, everyone agrees with that idea embedded in the Libra 1.0 white paper of financial inclusion, of reducing costs of remittances. It was just the level of credibility of Facebook in that context was not that high. But I think from the standpoint of the technology is there if the will is there to do it. And I think that going forward may be one of the really important outcomes on the stablecoin side.
Interesting. Now, looking ahead, how do you expect domestic money and payment systems to be reshaped? What are your recommendations for central bankers and supervisors to build and regulate better monetary and payment systems at the domestic and international level?
Yeah, I think at the domestic level, a lot depends on the context. One, are you a major economy? Are you a major economy central bank? If you are the European Central Bank, if you're the Federal Reserve, if you're the People's Bank of China, these central bank digital currencies will be different animals than other central bank digital currencies. And so, to the extent that you now have one that is probably coming, the others are probably going to have to look at similar issues just from a global geopolitics competition sort of angle. But even within those countries, you're going to have very different design features. In other words, if you think about the Chinese context, the Chinese electronic payment system is already very well developed. So clearly you don't need a sort of national account-based retail system where everyone in the country has a direct account with the central bank. That would be pointless to do at this point because you already have alternative systems. Likewise, in the context of the single European payments area, you already have something like that. If we look at the US, though, we've actually got a pretty substantial amount of the population that doesn't have that. And so if we look at the digital dollar proposals have sort of a combination of basically a Fed account, which is for people who don't have access to a financial account, and a token-based system. But that token-based system in the digital dollar proposals is very much designed to mimic physical US dollars. And so it's not meant to be necessarily a unifier across all payment systems in the way that the digital yuan potentially is, but something quite different. Likewise, if we think of the privacy features that are likely to be embedded in a sort of euro digital currency versus a dollar digital currency versus a yuan digital currency, I think we can imagine that the sort of privacy features, the anonymity features, are likely to be quite different given the sorts of societal and legal approaches to data in those different jurisdictions. Now, from the standpoint of countries which are not major economies, major currency issues, the key is going to be looking in each country, what is your context? I think with a few exceptions, you have to realize that for most countries, just because they create a central bank digital currency doesn't mean that everybody else in the rest of the world has any interest whatsoever in using it. And so where they're probably likely to get the most benefits is to look, what are their payment systems looking like? Do you have a system where you have a fragmented payment system? Do you have heavy reliance on currency? Do you have something where cash is already on its way out? And thinking about how you could use a central bank digital currency of different structures to address those existing weaknesses to make your overall financial infrastructure work better to support monetary and developmental objectives going forward.
Now, you raise a really interesting question around privacy. Now, if we look at fragmentation in the payment space, Asia is probably one of the best testing grounds for this, especially when we look at technology adoption, even ASEAN, if we further refine it. Now, privacy is going to be one of the biggest challenges there because ASEAN, fantastic opportunity even in the digital banking space, but every single jurisdiction has a different approach. How do you anticipate, the central banking digital currencies to actually remediate the privacy challenges if and when they go international?
Yeah, I think that's, from the standpoint of international attractiveness, that's going to be one of the issues. And I think, for many domestic central bank digital currencies, they're just not going to be international. I think we just have to accept that in the same way that most people don't use most domestic currencies already internationally, it's only a few major currencies, the same thing is going to happen in the digital environment. But one of the key questions is going to be the interoperability of those domestic systems. So for instance, if everyone in ASEAN has their own system, how are you going to operate across those? Likewise, if you think about, probably for an extended period of time, the Chinese central bank digital currency is likely to be largely limited to domestic purposes. And so you will need essentially ways to interact with that. And so there are real opportunities for places like Hong Kong or Singapore to basically focus on building bridges between a variety of different digital currency projects, digital currency areas, in the same way that they have done in the context of traditional electronic payment systems.
Excellent. Well, with that, I'd like to thank you, Douglas, for sharing your research and your time with us today.
Thanks very much, Brad. Great to talk.
Now, we've only unfortunately scratched the surface of the research and the findings, so I'd encourage everyone listening to download the full report. Thank you very much and looking forward to speaking with everyone again shortly.